Welcome to the Stock Market Daily News Podcast. It's Friday, January 17th, 2026, and I'm here with your 2-minute roundup of yesterday's market action. Major indexes ended mixed. The S&P 500 edged higher, the Dow Jones held steady, and the Nasdaq outperformed with solid tech gains. The big headline? The Russell 2000 Small Cap Index notched a fresh all-time high, signaling rising investor appetite for risk. Today, we'll unpack what's fueling tech stocks, the latest buzz around altcoins, and some cautionary signals in the financial landscape. Let's dive in. First up, tech stocks took center stage as Indian IT giants rallied hard. Infosys American Depositary Receipts surged nearly 10% overnight after the company surprised the market by raising its full-year revenue guidance for fiscal 2026 to 3.5%. While that sounds modest, it's better than recent trends. Experts, though, are urging caution. The sector's mature, and large caps growing much past mid-single digits could be tough. For investors, it may mean IT acts less like a growth rocket and more as a quasi-cash play, less risky than high-flying FMCGs, but not exactly cheap at current valuations. Shifting to U.S. markets, the Russell 2000's record run is catching everyone's attention. The index is up about 7% already in January, adding close to $220 billion in value, and outpacing the S&P 500 for 9 straight days, the longest streak since 2017. What does it mean? When small caps lead, it often signals a market-wide risk-on mood. That optimistic sentiment is even rippling into the crypto space, where altcoin traders are betting on a strong rebound, tracking the momentum in small-cap equities. Speaking of bubbles, is this rally getting ahead of itself? Market strategist Barry Ritholtz notes that, unlike the dot-com era, we're not seeing runaway price-to-earnings ratios or dangerous levels of debt. In fact, forward valuations for the Magnificent Seven tech giants are mostly stable, and earnings growth remains strong, led by companies like Google, up 65% last year after harnessing AI. Still, only 2 of those 7 big names even beat the S&P average, hinting at a broadening market rally and less concentration at the very top. On the macro front, look out for headlines around Federal Reserve independence. Fitch Ratings has warned that any move to politicize the Fed, as officials investigate Chair Jerome Powell, could weigh heavily on U.S. credit ratings. The reason? Global confidence in the dollar and America's financial flexibility rest on a truly independent central bank. For investors, any threat to that status could spark volatility in currency, bond, and equity markets. Let's wrap up with a quick recap. The S&P 500 closed higher, Nasdaq led the way on tech optimism, and the Russell 2000's new high is stirring risk-on vibes both in stocks and crypto. Market breadth seems to be improving, with small caps and non-U.S. equities catching up. As always, keep an eye on next week's earnings rollouts, Fed meeting chatter, and any signs of policy or credit shifts. Thanks for listening to the Stock Market Daily News Podcast. Subscribe now and join us each weekday for fast, actionable market analysis. See you next time, and happy trading.